I'm Danielle Hale, Chief Economist at Realtor.com. As we move further into shoulder season, I'm happy to announce that this video series will be back on a weekly basis with everything you need to know about the economy and housing market. This first week of the month is Jobs Week. Friday, we learned that hiring steadied and unemployment dipped in August. Meanwhile, jobless claims data show that layoffs are still occurring at a low level. Next week's inflation data will be an important input to the Fed's decision the following week. Markets currently expect just a 25 basis point cut at this meeting, which I think is most likely, but a sizable minority of investors anticipate a full 50 basis point cut. Mortgage rates have priced in these expectations, holding below 6.5% for a fifth week. This means that the Fed's widely anticipated cut later this month will not lead to one-to-one mortgage rate declines, but mortgage rates could fall further if the Fed indicates a lower policy path ahead. Some buyers and sellers appear to be holding out for even lower rates. According to the Realtor.com August Housing Trends Report, inventory continued to climb, notching a new 5-year high. But not because sellers were more active. Newly listed homes actually declined. Rather, buyers were less engaged, driving up time on market. This mirrors recent pending home sales data that showed a decline of 5.5% in July. This early-stage sales indicator was also 8.5% below 1 year ago, which Hannah Jones attributed to affordability challenges. Lower competition has shifted market balance toward buyers somewhat sooner than is seasonally typical, and sellers have reacted by ramping up price cuts. Shoppers who want to take advantage of the somewhat less competitive housing market and still secure as low a mortgage rate as possible can pursue some of the approaches that Ralph McLaughlin found led to lower mortgage rates. Namely, buyers can improve their credit score, drop debt or grow income, make a larger down payment, or, for the biggest possible savings, shop around among lenders. For those not ready to buy a home just yet, Realtor.com tracks rental trends, and this month we released an inaugural New York City rental trends report by economist Jaishu. The deep dive into city-level data found that rents for larger homes and Manhattan-based dwellings eased, but overall median rent in the city rose 2.2%. And as schools start or continue this week, back-to-school season inspired us to take a look at where families can find a home in a top-rated school at a below-median price. This is no small feat. We found that a typical home near a top-rated school comes with a nearly 80% premium over nearby homes. There are top schools with affordable homes, however. These dwellings tend to be smaller, older, and lacking some sought-after features. You'll find all the details, including full reports and our housing data for download, at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates, and now Instagram at Realtor.com, econ spelled out for graphics.